As I've told you before, I'm enrolled in a class with Goldman Sachs. 26 small businesses here in Birmingham or in Alabama have been chosen by Goldman Sachs to learn how to recognize a growth opportunity in our business and how to take our business to the next level. As a result of that, I have put some things together that I think I could have predicted this if I had known what I know now. This is the growth of Tesla by 1,566% in a matter of 2 years. I now know how to recognize that that's going to happen. How has that come to pass? Well, the first thing they have taught me is how to understand the metrics of my business, and then I have taken that knowledge and said I need to understand the metrics of the businesses that I want to invest in that could potentially give me a 1,566% return in a matter of 2 years. But recognize it's going to happen before it's happened. So the first thing you have to do, and I'll show you this on my computer, is look at the metrics of how efficient is this company that is going to explode at turning cash into profits. How good is it taking a dollar in assets, whether it be stock or cash or buildings or machines, and turning it into a profit on the other end? How good is it? And I'm going to explain these metrics to you. Then what I'm going to do is I'm going to take you to this Excel spreadsheet that I created, where I went and I looked at the companies that have had exponential growth, good growth, companies like Vertiv and Nvidia and Meta and Netflix, and how you might have recognized that that explosion was going to happen 2 years before it happened. What is taking place in the business that they've recognized a growth opportunity that's going to turn into a growth of over 100% in their stock price in the next 2 years. How can you do that? I'm going to show you not only how I could have recognized it with Vertiv, Nvidia, SMCI, Modine, Meta, Netflix, but also Tesla. How in 2021 or in 2019 through 2021, I could have said this stock is about to explode. And here is why, and I can prove it's going to happen. That's what this video is going to be all about. And then I'm going to take you and show you some stocks that I think, based on the knowledge I've acquired from Goldman Sachs and putting the dots together, some companies that I believe are going to duplicate the performance of Nvidia, Vertiv, and maybe even Tesla in the next 2 years. That's what I have learned. That's what I want to share with you. And that's what I'm going to take you to my computer and show you. And then you see if you want to become a part of this movement, this tribe of people who have figured this thing out. Okay, let's start with the metrics. This is my cheat sheet, what it will look like in the next 30 days. And what I want to start with is Apple, and come across and look at the first metric. The first metric is asset turn ratio. And what that is, you take the assets and you divide that into their revenues, and that tells you how good they are in turning their assets into revenue. And from revenue, we get to profits. And as you can see, for every asset that Apple owns, they are able to turn it into $1.16 in revenue. That's it based on the past quarter's earnings report. Let's compare that to somebody. Amazon is able to turn it into just a little bit better, $1.17. But let's look at ASML, the big producer of the machines that make the wafers that turn into our semiconductors. They're able to take a dollar and turn it into 63% revenue. Not near as good as either Amazon or Apple. Let's go to the next metric, and this is return in net income. How much of the assets can they not turn into revenue, but income? 30% of the assets that the Apple has turns into income. How about Amazon? 8%. How about ASML? 16%. So there's a difference in the companies. And now you're seeing how profitable they are. This is an interesting one as well. This is if once they take their assets and they take them to the bank and they leverage them with a loan, what are they able to turn that total equity into net income? And that's 160%. That's hard to beat. And you probably won't see a company that does much better other than Nvidia, 123. So if we know these things, that these companies are good at turning assets into both revenue and then income, and then they turn their gross margin is 46% and their net bottom line is 25%, we say that's a profitable company and we want to be a part of it. Now, that's companies today. How do we spot them once we know the metrics to see that they are going to have exponential growth? Let me take you to my Excel spreadsheet. This is the Excel spreadsheet that I just made over this weekend. When it dawned on me, I understand how a company recognizes a growth opportunity and what they do to take advantage of that growth opportunity. Let's look at Vertiv. Vertiv had 172% growth in the last year. Their revenue, and what I'm going is going back 2 years between 2020 and 2022 and saying, okay, what happened in that period that would have given me a clue that Vertiv is going to grow exponentially in 2024? Well, I'll look at their revenue growth, up 30% from 2020 to 2022. Their income is actually down 33%. Their employee growth is up 13%. Their debt is down 33%, and their asset growth is up 25%. What strikes me in here? If I'm a business and I recognize that I am going to have a growth opportunity and it's today, what do I do to make that growth opportunity materialize? Well, the first thing I would do is go to the bank and explain to the bank, I have a growth opportunity. Here is my projections. Here's my past revenue growth. Here's everything that I'm doing. I need some money so I can do what? So I can buy equipment and employ more people. Look at this number. Look at this is their growth. This is Nvidia's growth. If we're between 2020 and 2022, their workforce grew by 63%. Why is that? Because they needed more technicians, more engineers to create these GPUs that they were going to sell in 2024. That's the key. That's the red light going off and saying, blah, blah, blah. There's a growth opportunity in this stock, and if we would have recognized it between 2020 and 2022, we would have seen some growth. Look at Meta. Meta grew their sales force by 49%. Netflix by 36%. That's a lot more people than you had the year before. That is when you recognize a growth opportunity in a business. You say, I need to leverage up. I need to borrow money. In many cases, Meta increased their debt by 100%, SMCI by 1,000%, and Nvidia increased their debt between 2020 and 2022 by 450%. Why? Because they needed the money to hire people, to buy equipment, to make those, to architect those GPUs. So if we go back and we find these clues in today's numbers as to who's going to be the winner in the future, we know. Look at Tesla. I went back to 2019 to 2021. They increased their employees by 107%. They doubled their employees so that they could gear up to make that happen. in the following 2 years, from 2021 through 2023. That's the canary in the coal mine. That's the bright light that you see at the end of the tunnel that says this is an opportunity. Let's go down here. Who else has recently increased their employees? Well, APLD has increased their employees by 200%. Navitas. Remember Navitas, the company that's down 62%? Why are they increasing their employees by 94%? Why has their revenue grown by 199% over the last 2 years? What is it that I see that the rest of the world doesn't see here in Navitas? What about ACLS? Have you even heard of it? Well, probably not, because they're down 32%. But why is their employees up 44%? They've recognized a growth opportunity, and that's coming around the corner, that the market hasn't recognized, that Wall Street hasn't recognized, and they're gearing up for it. They know their business. Skywater, a small foundry that makes semiconductors for the military. They're here in the United States. They have geared up their staff by 24%, almost 20. They've increased their debt by almost 300%. Why? Because the orders are coming from the military for semiconductors. Now, their stock is up 61%, but it's not up according to their income and their revenue growth. So by looking at and queuing into the first number, and that is employee growth, we can spot the company that is depressed. Look at AHR. They're up 26% in employees. Their revenues are up 30. Their income is up 28. Their asset growth is growing by 63%, but their price is down 71%. How did I find this? I know where to go to look for the data. I have come to understand that when I was a financial advisor, and there were 6,500 companies out there for me to analyze and say, this is where you should invest your money, I couldn't do it because I didn't have the data. I would have had to order 6,500 annual reports and thumb through those annual reports to find this data. Now I know where to go to get it. And I can get it. I built all this over the weekend. Now I'm hiring a technician, an engineer, that I can say, fill those boxes automatically. Go scrape the internet. Go to Wise Sheets. Pull this data and tell me 30 other companies that are beefing up their employees because they've recognized a growth opportunity. And I don't care if it's in semiconductors or AI or solar energy. If you're hiring more people, and if you're going to the bank and saying, here is what we're doing, and will you lend us money? And they say yes, the bells are ringing. The information's there. Invest in it. Now, what I'm saying to you is, now that you know how to do this, go do it. Go search the internet for this data so that you know who's hiring and why are they hiring and what kind of history have they had, that their metrics are in place, that they will make money as their employees produce revenues that turn into income. I'm Kerry. I'm a retired financial advisor who just gets off on this sort of thing. I mean, I woke up at 5 o'clock in the morning and said, hey, I'm talking to this Goldman Sachs about a growth opportunity, and it will take and quadruple my business in 3 years. No, it'll tenfold my business in 3 years. Well, what do I need in order to make that happen? I need access to capital, so I can spend the money on people and advertising to share this kind of knowledge with the whole world. To say, I figured it out. I know, and I can do this for you, and you can have access to it for as little as $20 a month. That's the opportunity that's in front of me. And when I said, what do I need to have it happen? I need people and I need money. So who else has an opportunity, has good metrics, and only needs people and money? And where can I go to discover them? There you have it. What more do you need? This is your ticket to wealth, because I figured it out and I'm willing to share it with you. 14-day free trial. I'm not sure I'll have it all done in 14 days, but you'll be on the bus, so when we close the doors, you'll be a part of the tribe. Kerry Grant-Camara, retired financial planner, student at 80 years old of Goldman Sachs. Goldman Sachs says, that old man's figured it out. We need to help him take it to the next level. Let's talk more about this.